What's going on, guys? It's Goose from the Wise Wealth Discord, coming back at you with another watch list. Just wanted to go over some of the levels that we were watching last week and how they're playing out this morning. Um, I don't want to say I told you so, but the market looks to be trying to form a bottom. A temporary, that we don't know, but you like to catch both sides as a trader. When things start to get overextended in the downside, then you could start to think about maybe some long calls and stuff to that nature. Accumulating at these levels, I think, was a pretty smart idea. We still have the 200-day moving average above on most of these major indexes. The bulls are not out of the woods. The bears are still here to stay, I'm sure. But a little relief rally is always nice as a long-term investor. Gain some confidence. Now that they're not walking back the tariffs, but they're not as directed as people thought, or like broad blanketed, like covering over everything. So I think they're just sighing a sigh of relief that it won't be as bad as previously thought. And that was kind of my bullish thesis, is the fact that sentiment is just so bearish. But you look at the fundamentals of a company and they're still growing year over year. And it's like, if your profit margins are still growing, but sentiment is just bearish, like the CEOs and the consumer confidence and stuff is going completely in the toilet, that's where I start to see a disconnect, is where I feel like there's more fear out there than there is actual like damage to the economy. I do think that's coming, and that's for, videos in the future. I do think there is still a bearish thesis out there where we could create that higher low, get denied in between the 200-day and then continue to keep going. But before I hop into the charts, I wanted to show you guys the economic calendar. Flash manufacturing PMI this morning after market opens. Final GDP will be Thursday. Unemployment claims Thursday. Now, mind you, these are for the week, for the first time during the past week. So with unemployment claims, as much as I think job numbers will start to look bad, I think it's going to take a little time to work through the economy. I think we still have until about mid-April, hopefully, until things start get a little bit shaky. Core PCE, I still lean on the side that not CPI, but inflation is still coming down, and that's usually, it's a change in the price of goods and services purchased by consumers, excluding food and energy. So as we've seen on the Trueflation chart, it has been coming down drastically. So we'll have to keep an eye on that, but I think we're setting up for a nice rally. I truly do. I mean, I know I'm on the bull side. I swung some NVIDIA calls into the weekend, so of course, I'm a very happy camper this morning, seeing that we're finally getting these break above some of these ranges. IWM has some work to do. But this is why we watch these levels, is like when you see, okay, now we just need to hold this, base it out. Now we're starting to try and break above. SPY still has some work to do. They have the 200-day moving average above at 573.50. The Qs is finally getting out of its bear flag. They still have a little bit more work to do, up to 493. That's almost a whole nother percent. But a $7 gap up, that's beautiful. When you're in calls, you love that. But a temporary bottom nonetheless. From the bottom to where we're at now, it has to be at least like 5% now. I think we're at 3 on Friday. Let's see. Yeah, about 4.6%. So that's a good relief rally. It could how high and how steep is, like, I don't personally know, but I do know that when you look at how steep we went down, no relief rally, then you look at seasonality, and then you kind of gauge, like, how bearish are people and why? What is their reasoning? And it has a lot to do with the unknown and trying to price in tariffs and stuff like that. And when you look at companies' fundamentals, like, say, NVIDIA, their quarter-over-quarter growth was like 60, 70%. And it's like, you look to your left and you're like, 70%? Like, that sounds awesome. But people are selling the stock simply because of the feared tariffs that are coming. And when you have fear like that that's kind of unjustified, then you're like, maybe it is a buying opportunity. And that's exactly what I think this is. I will say I don't think we're going to all-time highs. I think that's going to take a little bit to work through the system. We're going to start getting bad job numbers, stuff to that nature. But as traders, we play these levels and we watch them. And if you see it on Friday when, the OPEX was ending, it was a huge push up and volume started coming in, and we had a lot of volume down here too. I know I took volume off as an indicator. I don't really use it that much in trading, and I started realizing that a lot of the YouTubers I watch do use volume. But you see that people are starting to kind of pile in a little bit when you see volume. And it doesn't necessarily have to be a crazy amount of volume to keep going. But these breaks above these ranges are big. We could potentially get that pullback in the first couple days, but I think ultimately data could be pretty good. I think that the GDP may not be as bad because now people see that Atlanta Fed where they brought it down in the negatives. Unemployment claims are only for the week, so I really don't think it'll be that bad. Maybe it will be, who knows. Core PCE, I think, will be a great number as well. That's on Friday morning before market opens. So as we navigate through some of these economic data, it's a pretty quiet week. We see that the technicals are playing out pretty well. You need to hold these bases. Microsoft can come up and test that 400 level and possibly be a level of resistance. Nvidia was the one I played. I love the bull flag. I mean, you saw on Friday we opened up down 1%, and they still were kind of just flagging up. So they bottomed out way before like the whole market has. So I'm hoping they could be the leaders. As you can see, they're up almost 2%. When I simulated the returns on Robinhood, it looked good. So I'm pretty excited. Pretty excited about open. As long as we can hold these levels for the next, 45 minutes, we'll see. But the flag, picture perfect technical analysis, get above the 120.50 level, and now we're really cooking. We could start to test the 123, maybe even that, because when that death cross happens, bears either take major control or the bulls start to pop out and make sure that that isn't, reality. And right now it looks pretty good. Semiconductors as a whole, I know AMD looks great. Tesla finally breaking out of their bear flag. And be careful. You see Friday, 5.25. Today, 4%. That's a 9% move in 2 days. And when Tesla starts to move and you see this illiquid, area, they could start to move. So be careful of the 200-day moving average as a bull if you are holding calls or shares. 284 would be about the level I would be looking up above. Meta, they've been in this very big downtrending channel. Starting to move up though, making higher highs, higher lows, barely by the inch of their skin. Or inch of, that was a really weird saying. Made that higher low, and now they're going to create that higher high in pre-market. So just keep building it out. Get above 622. I'd be a little bit more confident to go test that 50-day moving average. But Meta stayed above their 200. They just chopped above it, and now they're moving up. AMD looking beautiful. I was saying last week, I was like, yeah, like they're not the greatest stock in the world, but they could find some love, and that's exactly what happened. Look at these candles to the penny. Wick, gone. And it's like, this is why we watch these levels. It's denied, it's denied, it's denied, it's denied, it's denied. It's resistance until it's broken above, and then what do you turn it into? Support. Resistance turned into support is obviously a higher high, higher low, and building its channels, and that's what we're watching, guys. That's why it's a beautiful thing to see the calls starting to play out, because we've been watching for the last couple weeks. Like, okay, yeah, the Bears definitely have been doing something, but when does this relief rally start? And it chops around, chops around, chops around. Google got kind of scary off of that break. That was a pretty big drop, but honestly, their PE ratio is just so attractive right now. I think they're within like 16 to 17, and their average PE is about like 25. I'm not saying, Google's going to be the be all end all in the next, couple years, but they're a great company. They own so much and just such a great computing, software, hardware. Google is a really good company. And when you see these levels, you start to like salivate as a long-term investor, like, ooh boy, ooh boy. But I like Google. It could obviously end up getting down to this 150 level, kind of create the double bottom and go. But a good weekly close on them with the bullish hammer. And you just need above about the 170 level, and you could start to cook. You could start to see the 200-day moving average. Amazon, it's been beat down tremendously, but you could see that it's starting